I'm Marilla Fernandez. Thanks for joining us here on Market Call. Kim Bolton on the show today. He is president and portfolio manager of Black Swan Dexteritas and is taking your questions on technology stocks. Here's how to get hold of us today. If you want to call us, do that toll free. 1-855-326-6266. If you want to send an email, you can do that as well. marketcall@bnnbloomberg.ca. Kim, good to see you again. Thanks for coming in.
Thanks,
I
Marilla.
know you have noticed that investors have sort of changed the way they're investing. Can you expand on that?
If you look back over the last couple of years, sort of 23, 24, the way you played the game was that you bought it on dips. And then ever since the inauguration on January 20th of this year, it all sort of changed. And the only way you can really sort of play the game is selling on rallies. It's a proven fact that 80-85% of the time the market goes up. So eventually that will change. It'll go back to buying on dips. I think it probably has a lot to do, of course, with the tariffs and all the noise that we get out of Washington. But I think this is a fantastic opportunity over the last few weeks to actually pick up some very cheap but very strong technology publicly traded stocks.
Is that what your firm is doing at this time when everybody else is kind of holding back, is what it seems the last week anyway, and unsure what to do?
Yeah, sort of technically, because right now a lot of the players in the market are sort of following it technically and looking at moving averages and RSIs and so on, because the fundamentals seem to change almost every day. But we'll get back to the fundamentals. Just think about it. Here we are, the 26th of March. It's only 3 weeks away until we get into earnings season once again. So it'll go back to the microeconomics and sort of earnings, top, bottom line guidance. And that's probably going to be the trickiest part for come the conference calls in the earnings season of whether these companies have visibility on their guidance.
Yeah, we're definitely seeing a lot of companies come out without guidance or not a lot of guidance because they're not sure what to make of the situation. Yeah. You also have a diagram you want to share with us. Tell me once we pull it up what we're looking at here.
Oh, okay. So I remember, oh boy, when, it would have been back in October of 2022. And sort of in November, that's when Microsoft came out with generative AI. And then you had an explosion of the infrastructure and so on. And then, last year we talked a lot about the large language models and the micro managed models, all in preparation for when the software firms were actually going to grab it and actually take it out to the enterprises and take it out to the consumers. And so we're right now on the threshold, and you're going to be hearing about this agentic AI software ecosystem for the rest of this year. Let me just sort of give a the difference between agentic AI and sort of generative AI. So agents represent really a paradigm shift in how AI systems interact with users and environment. Unlike generative AI, which creates content based on prompts, right?
Okay. Yep.
And agents powered by AI make autonomous decisions and actions. That's the big difference. So generative AI is sort of more reactive. Agentic AI is more proactive and can solve complex problems independently. And finally, agentic AI represents revolution from that sort of robotic process automation. And now you have these AI agents that don't require explicit inputs or produce predetermined outputs. So it's all about repetitive tasks.
Okay, that will be substituted or carried on by AI.
Right, and it's going to make you and I and everyone else a heck of a lot more efficient, and we can focus on things that require brain power to actually come in. So, if you just look at this this diagram,
can we talk about it when we come back as well? Because
sure.
I want us to take a quick break, so we'll continue the conversation. Kim Bolton's here, portfolio manager for Black Swan Dexteritas. He's taking your questions on technology stock. We're going to pick up the conversation in a moment. Stay tuned. Thanks again for joining us here on Market Call. We want to get some questions in. Galen is sent a question in email. He says, is Arista Networks a buy, sell, or hold at current price? Kim, Arista Networks.
Thanks, Galen. Yeah, we actually own Arista pretty well across all of our separately managed accounts and in our funds. Arista actually came out of Cisco. And it was a bunch of guys, boy, if you go back to like 2014, 15. And so they went off on their own. There was a lot of litigation that was going on. Right now it's trading around mid-80s. We have a 12-month price target of $138.50. So
Why is that?
Why is that? Okay, so Arista...
Because they're at 81 now, right? So that's a big jump.
Yeah, it is. But you've had, this is why I love coming on at times like this, because it's like a blue light sale in aisle 6 right now for the technology stocks. So Arista, so they produce the switches and the routers that go in to the hyperscalers, you know, the big cloud guys, right? And so on the stack. And so every stack requires the switches and the routers. They keep coming out with faster and cheaper switches and routers, but they also bring the servicing solutions on top of that. They just came out with this thing called extensible operating system, and it's a programmable Linux operating system that is very much geared toward automation and it actually allows zero overtime upgrades. So anyway, we really like it. Buy it here. I would suggest you could buy a third here, buy another third down at like 78, and another third down at 73.
Well, there you go. Okay, good advice. We'll go to the phone lines. Jason's on the line from Toronto today. Hi, Jason.
Yes, good afternoon. I am calling about Nvidia. I was looking up AI, and it said it's pronounced E-N, Nvidia. What do you think of the stock, and are you buying it for clients, and at what levels? Thank you.
I've had this debate before with people of whether it's Nvidia or Nvidia.
Nvidia.
There you go. Okay, so it's taken a dip. It came back a little bit, but dropping again today and yesterday as well, I believe. What's your forward take on Nvidia?
Okay, so we have a 12-month price target of $174. So that's another $60 on top of it. It's almost like it's like a 50%, right? Going out 12 months. So Nvidia are the ones that have the accelerator GPUs.
Okay.
Graphic processing units, right? And they actually bought a firm over in Israel back in 2017. Starts with an M. Anyway, they were the king of the GPUs. GPUs were used initially for gamers, and then it was for mining of cryptos. But then they came across of how they could actually package the GPUs and sort of stack them, and that's what the big change was out there, and it allowed the acceleration of the GPUs. So on top of that, you know, one of the beauties of NVIDIA is that they're making a heck of a lot of money, tremendous margins, and they're actually deploying that money into the likes of robotics and agentic AI. So it's not just about their GPUs. They have a garage full of companies that are going to do wonderful for them. So that's why it's not just about the GPUs. You have to build in over the next 12 months all about the robotics. Next year, we believe robotics are going to be the big thing after agentic AI is sort of taken off. And they're all over these spaces.
Okay, so buying at 114 because it's even cheaper than it was a few weeks ago at this point. Okay, let's move on to Costa. Costa's calling us today from Montreal with a question. Hi, Costa. What is your question today for Kim?
Hello, my friends. Thank you for taking my call. Mr. Bolton, I appreciate all your wisdom and knowledge all these years. Thank you very, very much. What are your thoughts on Constellation Software going ahead this year? Would you consider it a beautiful entry? She's about 5% cheaper. Do you consider her on special and maybe a price target? Thank you very much. Have a beautiful day, guys.
Thank you.
Thanks, Costa. You make me blush, but this is what we do. So currently trading just under that 4,700 level. Costa, we have a 12-month price target of 4,900. So it's another $200. It's interesting when you look at the price action of Constellation, it really hasn't got hit the same as like a Shopify or a Celestica, right? And I think the reason for it is probably two, maybe threefold. Number one, it has so many horizontals across. It's a software firm, and then they're different from like a Microsoft, who is the king of the software. Microsoft sort of has a horizontal view of the market, so they'll come out with a software like an Office, and it can be used across all kinds of verticals, various industries, and so on. Constellation approaches the software business differently in that it just looks at verticals. So they'll have an engineering vertical, they'll have a healthcare vertical.
They're very industry specific.
Right, and then they acquire companies. And I think it's that diversification that that really sort of brings down the volatility. So we like it.
You like it, and there's a little bit ways to go for them to go up. Okay, we do have to take a break. Kim Bolton is president and portfolio manager, Black Swan Dexteritas, and he's taking your questions on technology stocks. We're back in a moment.
Making sense of business and the economy can be tough. We dig through the details to tell you what you need to know with straight talk and expert analysis so you can make informed decisions about your future.
Taking Stock, Fridays on BNN Bloomberg.
Welcome back to Market Call, and thanks for joining us today. We want to go straight to the phone lines. Michael's been holding on the line from Vancouver. Hi, Michael. What is your question today?
Hello, Marilla. Hello, Kim. Kim, thanks for taking my call. Kim, my question is on Microsoft. I have held it for quite some time. And Kim, I maybe just address, I guess, the fact that it's gone from almost highs of 475, 480 down to the low 390s. And I just wondered, Kim, is your thoughts that it has the downturn has been in conjunction with the rest of the Mag 7? And is there something specific about the downturn over the last, I guess, 3 to 5 months? You know, from the point of view of any concerns that you might have. And do you see it being closer to 300 or closer to 500 if you can read your crystal ball, you know, at year's end?
That would be a three-question in one. And I guess, is Microsoft being hit by anything besides the general trend we've seen at the start of the year with the tech companies?
Well, if you think about it in the broad market, but even as Microsoft as a barometer of the publicly traded technology stocks, we're basically back to where we were in July of last year.
Okay.
So I would get worried. Remember there was a pivot middle of July by the Fed, and the market rolled over really quickly, like in 2.5, 3.5 weeks, into sort of the beginning of February, and it retreated about 11, 12%, very, very similar to what we've had over the last sort of 3 to 4 weeks. Michael, I like your question, whether it's going to be closer to 300 or 500, because that's an easy answer, and the answer is it's going to be closer to 500 and not 300. If it were to go to 300, there's got to be a lot of fundamental concerns out there on the macro side of the market. They haven't held back. It'll be interesting come the earnings season on whether these big mega cap technology stocks, companies, are actually pulling back on their infrastructure. For example, Microsoft, they said they're going to spend $13 billion this year. And so the question everyone's going to ask, are you still on schedule for that? The other question, particularly with Microsoft, is so if you're spending all this money, are you getting any rewards? Are you making money? And actually, in the most recent, the fourth quarter, they actually announced, which was surprising, that their AI business actually surpassed their annual revenue run rate of $13 billion, which was a lot sooner. So these companies, although they're spending a lot, like Microsoft and Apple and Alphabet and so on, they are making money out of this whole AI revolution.
Okay, so there will be a bounce back there. Let's go back to the phones. Kunal is on the line from Toronto. Kunal, what's your question?
Hi, good afternoon, Kim. Thank you for taking my call, first of all. My question is regarding Celestica Incorporation, CLS. Is it currently a good investment based on its recent financial performances and the market record? And also, if you could provide your opinion on based on the growth prospect and potential risk associated with investing in. Thank you. I hang up and listen your feedback.
Thank you. So Celestica.
So we don't own it. We follow it very closely. I've always said when we get an opportunity to buy back, in a lot of our separately managed accounts and also in our funds, in our technology fund, we probably hold on to about, right now, 15, 16, 17% cash. And we're just waiting for that momentum to change from selling on rallies to buying on dips. And Celestica is actually on our shopping list. So we don't own it, but it is coming up. It's a great AI connectivity pick out there, and their whole CCS segment saw massive demand during 2024, increasing the market share, the revenue targets driven by their Ethernet-based switches. They expect in 2025 to have revenue of just shy of $10 billion. And now the margins in this business are a lot slimmer, so it's very much a volume thing, and Celestica is very well known for its management and scaling things. So we like it. We're waiting for the opportunity to buy it.
But you're not going to buy in at this point?
No, we're just waiting for that sentiment to change from selling on rallies to buying on dips, and this is a great company to do that.
Okay, let's move on to Steve, who's calling from Winnipeg. Hi, Steve. What is your question for Kim today?
Good afternoon. It's a Wednesday treat to be able to put a question to Mr. Bolton. So my question is on specifically on Semiconductor and more generally the ecosystem of the power semiconductor electronics. And in that context, is there any advantage to any particular player by being able to, by being strong in both the silicon carbide and the newer gallium nitride technology, which some say is going to be the future in power electronics. Thank you very much.
So with ON, we've traded it. We've never really sort of invested in it. Now, mind you, the average analyst out there has a 12-month price target of $82, and here we are sitting at 44. So people are hoping. I guess it's they disappointed on their last earnings, which so they missed on the bottom line. They're okay on the top line, and they actually lowered their guidance, and that's one of the reasons that it's down. So for us, it's sort of a jury is out. Again, just to try to find where the market sentiment will change. We like trading on, but it's not one of the semiconductor stocks that we invest in.
Got it. Okay, we do have to take a quick break. When we come back, we'll have a look at Kim's past picks. We're back in a moment. Welcome back. Kim Bolton is here with us, and we are going to go through his past picks, which are from March 20th of last year. So March 20th, 2024. And the last pick at that point was Intuit, which at the time was recommended at 639 American, of course, up to to 618 a year later, a little over a year later, 3% down return and total return the same. They help entrepreneurs. What's happening with them?
So we don't own it in the fund. We own it in a few of our separately managed accounts. If Intuit is going to do well, it will be in this first quarter because it's all about tax, right? They have sort of four segments: the small business, which is all about QuickBooks. Mm-hmm. The consumer side, which is that TurboTax. Okay. Then the sort of credit side for loans and credit cards and insurance, which is Credit Karma, and then the ProTax, which is the tax preparation software products. So this is their seasonality, tax season.
The tax preparation is more for professionals.
Yes.
Okay.
Yeah. So right now, trading right around 618. We have a 12-month price target. You can see it on the chart that it's got all the way up to about 715, but we have a 12-month price target of 705. So I'd suggest that you buy it here. If you get a chance, buy a third here right around 618. Buy another third down in sort of the mid 580s, and then it has very, very solid support at 550.
At 550. Got it. Okay. Let's get to your second pass pick, which was Workday. At the time, it was 276 American, now down to 253. So 8% drop in returns for both the return and the total return. And they do sort of workforce financial management for companies.
Yep.
What's going on with them? So
currently, just trading over 251. We have a 12-month price target of 312.5. So Workday, we were talking about Microsoft just a little while ago. Actually, even though Microsoft is sort of king of the software, they actually have Workday for their work applications, and especially for their finance. And then they have these modules called human capital management, which is all about HR. Okay. And so you can imagine, like when it comes to finance, HR, there are a lot of repetitive tasks. And so they have jumped all over this agentic AI, and they're one of those application players on that outer ring that have software as a service, But now they're going to have sort of another player on the field, which is an agentic AI that can actually almost act as a quarterback for their underlying software services. So we really like Workday. We still own it, and this is a great opportunity to buy.
Got it. Okay, let's get to your third pick, Palo Alto, which at the time was 282, again a year ago, March 20th, and now is down to 189.68, again American, so a 35% return upwards, but that's because they had a stock split.
Yeah. It shows the strength. You know, if you look at the technology part of the S&P, most of the stocks, even after this recent value of last week and part of this week, most of the technology stocks are down sort of 10 to 15. Some of them are down 20 to 25 in the technology side of the S&P. So you can see the strength of Palo Alto here, that they've actually maintained their momentum. I always sort of refer to Palo Alto as sort of like the home hardware of the cybersecurity side. So you have the likes of like Fortinet, CrowdStrike out there that are geared to specific parts of the cybersecurity space. Palo Alto pretty well does it all. It has the aisles for all the cybersecurity, for endpoint, malware detection, but they also have the scalability to actually go down into sort of the small and medium-sized companies. So this is where they've made a lot of hay in those small and medium-sized, whereas the CrowdStrike and Fortinet and Sentinel now have really been geared to sort of the larger enterprises out there.
Got it. Okay, we do have to take a quick break. Kim Bolton sticking around to take more of your questions when we get back. Welcome back to Market Call. We want to get straight to your phone calls. Kim Bolton answering your questions on technology stocks, and John's on the line from London. Hi, John.
Hi, Marilla. Hello, Kim, the unflappable Kim Bolton. Thanks, by the way, for Palo Alto. I also bought CrowdStrike near the bottom, near the pullback when there was that hue and cry about them in the streets.
Yep.
Should I stick on that horse, or should I bring some of that money over to Palo Alto, the home hardware that you recommended? Thanks very much, Kim.
So last August, this is what he's talking about for CrowdStrike when it went down to something like 219?
Yeah, and that's when they did a software update, and then everyone's screens went blue,
okay.
which is not a good thing. And you know, John, when that happened in August, we actually got out of the way. And it did sink quite a bit. And John, we actually got into Sentinel-1, symbol is S, which actually worked out quite well because they hadn't been tainted. You know, CrowdStrike, they're sort of the kings of cloud-delivered protection for endpoints, for cloud workloads, identity, and data protection, particularly in the cloud. And Sentinel-1 it's got to be like 35% of the size of CrowdStrike. But they've really scaled up, and hats go off to the management. Now, when it comes to CrowdStrike, John, we have a 12-month price target of 408, and here we are sitting at 373. So I don't know. I never like sort of selling all or buying all. I like doing it in a third, a third, a third. So maybe you take a third off, John, and put it into Sentinel-1. Symbol is S.
Got it. Okay, let's get back to the phone lines. We have Gordon on the line who's calling from Lethbridge, Alberta. Hi, Gordon.
Hi, Kim. I have a lump sum to invest in a U.S. ETF for my TFSA. I like to time the market. Should I go all in this week, or would you recommend I hold off till April 3rd or 4th after the Trump tariffs? Thanks, Kim.
I guess after the Trump tariffs come the reaction from all of the countries deciding what to do about the Trump tariffs. Would you wait a little longer than that, or would you get it now?
Well, if you want to go all in, I'd wait. But I'd actually recommend you take a third of it and put it in here. And if it goes up, you can pat yourself on the back and say that was really smart of me. And if it goes down, you can say, pat yourself on the back and say, hey, I still have 2/3 to still buy. So, yeah, that's what I'd do. I'd hold off.
Okay.
And when it comes to the tariffs, our version of it is he's really going to have, the whole Trump administration is going to have to hold off come the fourth quarter of this year, which probably means sort of September. But if you're going to do it in September, you might as well cut back on the rhetoric during the summer. Because remember, next year is the midterm elections, and they're going to have to spend the better part of a year for people to forget about all this nonsense and for them to garner their courage. So that's what we think. The tariffs will continue on after April 3rd, but it shouldn't go beyond the end of June.
Got it. Okay, let's get back to the phone lines. Lloyd on the call, also from Alberta today in Edmonton. Hi, Lloyd.
Hello, how are you doing?
Good, how are you?
Excellent, thank you. I'm a long-term investor, and I've been looking for a smaller technology company in Canada that I can hold on to for a while and see grow steady. And my question's on Enghouse with that lovely dividend they have. And it checks all the boxes, but I'm a bit concerned when I look at the share price over the last couple of years and wondering how Kim feels about Enghouse.
Do you know the dividend offhand for Enghouse?
No, Lloyd, do you know the dividend there?
We might have lost him. Let's take a look at the chart here.
I got it here.
Okay.
No.
Okay.
So Enghouse has been around since the 80s. Software and services company, two main business segments. Operates through interactive and also through networks, which offers solutions for contact centers and so on. Very much a sort of like a mini Constellation, because they build their business by strategic acquisitions, and they've done a great job. I guess the reason it hasn't excelled like a Constellation in this business is because they haven't been able to as yet to scale their business. Now, mind you, after all that, we have a 12-month price target of $36.50. We have it within some of our separately managed sort of accounts that brought it in as legacy investments, so we sort of hold on to it. So, yeah.
Okay,
that's
so
our version.
Enghouse currently at about 27. We are going to take a quick break. Matt, back with more of the answers from Kim Bolton and your questions in a moment. Welcome back to Market Call, and thanks for joining us. Dominic's on the line from Montreal with his question. Dominic, what is that question today?
Yes, hello. Thanks for taking my call. I'm calling about Tesla, and I wonder, Kim, if in the context of what you have said about agentic AI as well as generative AI, I wonder if you can share what you think of Tesla as an investment, its runway from here, and if you happen to know just off the top of your head how much of their income comes from cars and how it's distributed across their product line.
Okay, so Tesla down today another $14 to 273. It's taken a big hit from, I guess, mid to start of February down to where it is today partly because of Elon Musk in Washington.
Mm-hmm. Which isn't going to last forever. And if you look in the context of what I was talking about, the tariffs, we sort of think he's going to hang around Washington until no longer than the end of the second quarter, the end of June, and then he'll get back to work. Dominic, that was a good question about the vehicle side. I don't have it handy here, but if I remember, it was around that sort of between 70 and 80% of their revenues actually come from the cars, which will change. And Dominic, you're right. They do have leadership when it comes to the generative AI. They're the ones that have Grok, which is one of the large language models out there, and they purchase so many tens of thousands of these Nvidia chips. But then we very much believe that next year things will rotate out of sort of agentic AI is going to be going at a strong clip. But next year, the new theme and trend in the technology arena is going to be robotics. And that's when Optimus is actually going to be coming out, which is their robot. And if I remember correctly, Musk was saying it was going to be somewhere between 20 and 30,000 Optimus robots that are going to be sold next year. So
I'm almost afraid to ask what Optimus will do. What will it be? What will its primary function will be? What industries can she using them?
Well, the Optimus robots are actually used in the gigafactories of Tesla, but they're also used in the Volkswagen manufacturing facilities over in Germany. So they're programmable robots.
Depending on what you need. Okay.
But the Optimus for the consumer side that is going to be coming out next year, the idea is you're going to have a robot in your house to do sort of the repetitive, vacuuming, doing dishes and stuff like that, right?
Okay, robotic maid or butler. Let's go back to the phones. Rafi's on the line from Toronto. Hi, Rafi.
Hi, Marilla. Hi, Kim. Thanks for taking my call. Kim, is Oracle transitioning from a software company to a data center company? And isn't that supposed to bode well for them? I'm interested in your thoughts. Is this a buy or a screaming buy at these levels? Thank you.
Oracle at about 149.
Yeah. Thanks, Rafi. Great question. And the pivot actually happened about a year ago, where it was sort of the aha moment. For example, when Satya Nadella came into Microsoft, and he changed it from sort of a hardware company into a software / cloud company. Oracle was a little bit late. However, they have very, very deep pockets, and they've been able to really take over sort of fourth position in the cloud side. So you got AWS, and then Alphabet, and then sort of in fourth was IBM, but Oracle has sort of overtaken IBM on the cloud side. So they just have a lot of horses in the race, very, very similar to what, like Alphabet, what they have in their other bets. So currently trading, just under 150, and we own it. We own it on all our accounts because it's got a 12-month price target for us of 207.
Of 207. Got it. Okay. I think that is all the time we have for the calls today. So when we come back, Kim will share his top picks. That's coming up next. Time now for top picks. Kim Bolton here to share those. His first pick on the list is Amazon. Amazon, very well known to all of us. It was taking a hit as far as its reputation goes after deciding to pull out of Quebec or shutter their warehouses anyway in Quebec. and it's dropped like all of the other technology stocks down to 203 today. But obviously, you still like it moving forward.
I was just reading this morning, Morella, the price earnings on Amazon is actually now below Walmart.
Wow. Okay.
Yeah. So it's a great opportunity. I'll just refer back to remember I was talking about the agentic AI and that circle in the middle. You got the infrastructure guys, you have the enablers around it, and then you have the application guys outside. You can actually put Amazon in all three of the circles.
It was interesting because I did notice it on one of the outer circles. I was going to ask you why.
Yep. Because they have so much data. So in the middle, they have the AWS, right? The cloud, the hyperscaler. On the second ring, the enablers, their large language model group that they partner with, there are two of them. There's Anthropic, and then there is also Cohere, which is out of U of T. So that's the sort of large language model. And then they're doing it themselves, and they're actually setting up agentic AI. So pretty soon, when you go to Amazon for fulfillment to buy something, very soon coming, through sort of Alexa and so on, you're going to have these agentic AIs that is actually going to be sourcing from the AWS data system and the Anthropic large language models. And then on top of it, Amazon is one of the biggest users of robotics out there, which is another theme that is going to be coming up the end of this year. So,
which makes sense.
So we have a 12-month price target at $255.
Got it. Okay, let's move on to your second pick, which is Salesforce. Salesforce, of course, also a pretty well-known name. Let's see if we can pull up the chart, see where it is right now. 281, also on a slump down over 350 at the early part of the year. What do you see? Is there growth for Salesforce, or is this just a comeback you're looking at?
So again, on this whole agentic AI theme, they're the world's leading provider of cloud-based customer relationship management software, CRM, which has sales software, it has servicing software, it has marketing software, and even commerce software. So you can see where this is going, because back in December, they brought out an agent called Agentforce, but it was only a couple of weeks ago that they came out with the Agentforce 2DX, which is a true agentic AI. So they can now, when people go to Salesforce, they're going to be dealing with an agentic AI. And so you just ask the question, they'll go through all of their software and the sales and the marketing and commerce and so on, and they'll give you back like that an answer to your question.
Got it. I hope it's better than the chatbots we've been dealing with, because those are not so sophisticated yet. Okay.
So on Salesforce, we have a 12-month price target of $379.
$379. Okay. Let's get to your last pick, ServiceNow, which is also out of California and also cloud-based automation, but software.
Right. And so Salesforce was the king of the CRM, and then ServiceNow is really the king of sort of workflow automation. But you can see where this is going. This is perfect for an agentic AI positioning. And when they reported, when they reported the end of January, they were actually talking about how AI is actually making them money. They just brought out this new platform called the Yokohama platform, and it basically launched thousands of these AI agents, and the agentic AI agent is sort of like the quarterback for all these agents. So With ServiceNow, we have a 12-month price target of $1,159.
$1,159.
And that's a nice long runway.
That is a long runway. So as we wrap up the show, your best advice, because people want to know whether they should buy you now at this drop, and as we mentioned, the April 2nd is coming up, but your advice seems to be a third, a third, a third. Take it easy, take it slow.
Yeah, do a third, a third, a third, but then also wait until the market sentiment changes from selling on rallies to buying on dips. And then finally, sorry I didn't get everyone's answer, everyone's calls, but if you have any questions about particular single stocks, just give us a call at Black Swan Dexteritas.
There we go. All right, Kim Bolton, thanks for coming in. Always good to see you. Clearly, the callers enjoy having your advice shared on the show, so thank you for that.
Thanks,
and
Maria.
as we go to a quick break, let's take a look at the markets as they stand right now. Thanks for joining us. We'll see you again tomorrow.